Markets can be fickle. The underlying fundamentals, at least for gold, are still very strong. Why the equities market sold off today is another story that I am not going to speculate to guess, but I do think that we could see stocks continue to stabilize and move higher throughout the end of the year. My primary focus has been on gold, and that I really believe will move higher from this point.
Gold gained nearly a third of a percentage point on Friday, recovering from the decline experienced the day before. The precious metal is trading in the $2,750 range, just below a significant resistance level on the chart. The rebound in gold is fueled by renewed safe haven demand after hopes for a ceasefire in the Middle East were shattered by a Hezbollah rocket strike in northern Israel, which killed 7 people and marked the deadliest attack in months, according to the BBC. Additionally, uncertainty surrounding the closely contested U.S. presidential election is contributing to sustained demand for gold. Gary Wagner, editor of thegoldforecast.com, has provided insights into recent market volatility, highlighting his outlook on geopolitical risks and the trajectory for gold. He pointed out that the recent surge in gold prices has been driven mainly by geopolitical tensions and uncertainties related to the upcoming elections, rather than changes in yields or the dollar. Gold has been most sensitive to these two factors, and they've been the primary focus, Wagner explained. This was exemplified in 2024, when gold reached record high prices multiple times, coinciding with the weakening purchasing power of the U.S. dollar. Moreover, if the U.S. dollar's exchange rate declines relative to other currencies, international investors can purchase more gold with their local currency, potentially boosting demand and driving gold prices higher. Wagner characterized his strategy as that of a hybrid trader, integrating both fundamental analysis and technical insights. He emphasized that the intricate geopolitical landscape, including developments like North Korea's reported deployment of 10,000 troops in Ukraine, could shape U.S. reactions and significantly affect gold prices. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
Traditionally, the times we've seen the dollar move higher and gold move higher, historically, has been when the Fed was involved in intervention. And that's kind of what we're seeing now with interest rate normalization, and they're cutting rates. And so when they do that, we get that effect. The best way to describe it is that the most important relationship used to be that if inflation goes down, gold isn't as strong. And we're not seeing that. And the only times that I've seen both the dollar move higher and gold move higher is when central bank intervention is strong, which is what we have right now. I think that the primary impact with gold moving higher recently is more on geopolitical uncertainty and election uncertainty than yields or the dollar. It has been most sensitive to those two components. And that's the primary focus that I've had, is because we've seen times when the dollar moves higher and gold moves higher, and times when we have that tight correlation. Gold moves up, it's typically because the dollar has come down.
Yeah.
Especially over the month of October, let's say about 2620.
Yeah.
To current pricing has been primarily fueled by geopolitical uncertainties and fear. My technique, I've always labeled as a hybrid trader, meaning the most important factors are obviously going to be the fundamental factors that are in play that could affect the market. The technicals will give me an idea of where the peaks and troughs come in. In other words, even if the market's going higher, it's going to correct certain points and then return to an uptrend, all things being equal. So I look at the fundamentals first, and then I model it with a bias depending on my outlook on if those fundamentals could shift. So for example, when I look at what's going on in Russia and Ukraine, now that Korea has entered the mix. It was reported today by the Pentagon that there's 10,000 troops, North Korean troops, actually in Ukraine now and that they are fair targets. That brings a whole new landscape into what could develop in terms of how the US is viewing North Koreans' actions. And it could also play into the hand of North Korea if their soldiers begin to die in the Ukraine. And so right now, I think that those are the primary drivers, without a question, that will affect gold through the rest of this year.
Despite typically bearish influences such as rising bond yields and a stronger dollar, gold has achieved an impressive year-to-date gain of approximately 34%, establishing itself as one of the top-performing assets of 2024. Analysts anticipate that gold will maintain its upward momentum due to ongoing election-related risks and expectations of rate cuts. A notable trend has been the shift towards increased investment in physical gold, particularly by central banks around the world instead of U.S. Treasuries. In the third quarter, global gold demand rose by 5%, with the World Gold Council reporting a record volume of 1,313 tons. Wagner presented his technical analysis and year-end projections for gold, highlighting his hybrid approach that combines Elliott wave theory with Fibonacci extension and retracement patterns. He revealed that his latest analysis has adjusted the year-end target for gold upward from $2,700 to $2,865. Now, let's redirect our attention to a video.
It's a combination of Elliott wave, Fibonacci extension, retracement, pattern recognition. The chart we're looking at has got my most updated analysis and target for year-end, and it's been revised from 2,700 to 2865 because I wasn't able to project further than a third wave because wave one was complete, but you have to have wave one and wave two using wave one as a benchmark to predict where wave three could go. But that is passed, and I believe we've seen our corrective fourth wave. So we're in our final fifth intermediate wave, which is the final wave in a fifth primary wave, which is what we're in. So what we're looking at is these blue boxes are my basic calculation for each wave, 1, 3, and then 5. And it has been fitted to account for the potential for escalation in terms of what's going on geopolitically, which is what gold is very sensitive to. And so it's showing the upper levels of where it could go for this last fifth wave. In other words, the methods that I've used are still a hybrid method because I have to incorporate. So what we're looking at is my latest target, my projection for year end 2024. My feeling right now is that we have not completed this long run. And I also believe that the downside is going to come once the fifth wave is completed, because then we go into a actual strong correction, such as when you look at what happened in 2012 to about 2016, that correction was the correction from the run up from 800 to 1900. And so that's where I would start to look for floors. Right now, I'm still plotting where the ceilings are because I still think that this rally has got further room to the upside based on both the fundamental outlook and how that corresponds to my technical modeling.
Gold's status as a safe haven asset has grown stronger amid economic and geopolitical uncertainties. Investors are now nearly fully pricing in a 25 basis point rate cut by the Federal Reserve in November, reinforcing continued demand for gold, particularly as markets prepare for election-related volatility. The metal's robust performance in 2024 underscores its importance in diversifying portfolios, especially in the face of inflation concerns and global geopolitical risks. Looking back at previous market corrections, how do you think the current gold rally compares to past trends? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.